Oh, good morning, good morning, good morning. Look, it's a little bit dark and cloudy out there. It's not that bright, sunny, blue sky that we've seen over the last couple of days, which kind of leads me to believe, are we in for one of those kind of rocky, cloudy days? Good morning. I am Kenny Polcari, your host of the party, and today is March 15th. 2022, just 2 days away from St. Patrick's Day. But what is it that you need to know? What happened yesterday? What's happening today? What is the conversation going to be about? Well, one of the things I told you about a couple of weeks ago was the death cross of the S&P. So that happened yesterday. We'll get more into that in a minute. China COVID cases are surging. Conveniently, in my mind, Chinese tech companies continue to get slaughtered. Analysts now saying that China is uninvestable, which is very different from what they were telling you last year. PPI today and Fed tomorrow, two very important key macro data points. And what are we having for dinner? We're having the marinated pork loin. Stick around because I'll give you that at the end. So listen, last week I was warning you of the death cross that was about to hit the S&P, a cross that hit the Russell on January 16th, the NASDAQ on February 16th, the Dow on March 8th, and yesterday it hit the S&P, and the transports are only days away from their turn. Recall the death cross is a technical formation that dictates that when the short-term trend line, the 50-day moving average, crosses down and through the longer-term trend line, the 200-day moving average, it typically suggests weakness ahead. And that was clearly true for the Russell, for the NASDAQ, and the Dow, and now it's most likely going to be true for the broader S&P as well. Stocks continued to push lower after an early morning rally that supposedly saw Russia say that they would come to the table to hold constructive discussions. Well, that fell on deaf ears. As the day wore on, it became clear yet again that Vlad has zero interest in talking, at least until he manages to destroy a country, light the place on fire, throw out the citizens, and take control. Then maybe he'll talk. And at that point, I would ask, why would anyone want to talk to him? And as if that wasn't enough, guess what else just happened to happen? COVID is apparently rearing its ugly head again in China. 5,000 new cases a day versus what was 50 to 100, what has been the norm recently, right there. Doesn't it feel just a bit curious to anybody? And they're quick to go right into lockdown mode again, right? Both in Shenzhen and Chengdu, two key manufacturing centers of the country, and this raises fresh concerns about energy demand, thus the pullback in oil, which was most likely overdone anyway on the upside in the short term, but I still think it's going higher, and it brings up the whole supply chain issue all over again if they start locking down. Add in the complete collapse of China tech names that should be delisted from U.S. exchanges because they don't want to play by any of the rules, and you have every reason to hit the sell button. The question is, should you? Well, on the obvious losers, you should have done that weeks ago. But on the big, boring, cash-rich, dividend-paying Americana names, I would say don't be so quick to sell versus buying. Remember, as Warren Buffett always says, you want to buy when others are fearful, and you want to sell when others are greedy. And while it still feels a bit fearful, what we need to signal at bottom is a complete capitulation, a washout, right? Defined as the act of surrendering. That's when the algos go into a frenzied sell mode, unable to recognize what they have done, fed by mathematical formulas that dictate how they should react as selling begets more selling, which in the end begets more selling. Call me to discuss the crash of 1987 if you really want to understand how that works. Look, we all know it. We've experienced it. It's ugly. It's uncomfortable. But in the clouds, there's always a silver lining if you just stay focused and stick to the plan. In any event, the Dow ended the day flat yesterday. The S&P fell 32, the NASDAQ off 265, the Russell down 38, and the transports gave up 102. Energy down 3%, tech down 1.8%, consumer discretionary down 1.6%. Healthcare, though, rose 0.7%, industrials up 0.3%, and financials had a stellar day up 1.25%. The value trade continuing to beat the growth trade. Both are down, but value's only down 5% year to date, while growth is tanking, down 19%. And the minute the lockdown talk starts, then the algos hit everything, including the big mega cap tech names. Think Apple down 2.7, Amazon down 2.5, Google down 3%. Look, between the war in Ukraine, the Russia baloney, the Fed, the lack of clarity around interest rates, the reduction of the $9 trillion balance sheet, a slowing economy, possibility of a recession, new COVID outbreaks in China, talk of lockdowns, out of control inflation, it doesn't feel like a bed of roses at all. In fact, it feels pretty ugly. But today brings us the February PPI report. And we've been talking about this for days, and it's expected to be ugly too. It's going to be hot, and that's going to suggest that forward-looking CPI, consumer price data, is going to get hotter also in the months to come. The estimate have today's report coming in with a 10 handle on it. A 10 handle. Now, just FYI, that's not good. A 10 handle means that inflation at the producer level is running at 10%. A good 8% above the Fed's target of 2%. But who's counting? Apparently not the Fed. In the end, they caused this. They stuck around for way too long and they missed all the red flags, telling us not to worry, they have it under control. And how's that working for you? And I wouldn't mind, but it's not like this wasn't a topic of conversation. In fact, it started back in June of 2021. Everyone saw the pressure building. Economists, analysts, strategists, signs started to appear all over the place. Housing, basic materials, construction materials, food and energy. Economists all offering their opinion, backing up their analysis with hard facts. Yet the Fed seemed to ignore those same facts. And so now we have what we have. And the Fed is going to be forced to have to act aggressively. And that's going to set a whole new tone. And that's going to start tomorrow when the Fed announces their intention. Now, we all expect a 25 basis point rate increase. It will be, what's key is it's going to be what he says about future increases and the pace and timing of any balance sheet reduction. Will he offer clarity or will he leave it kind of cloudy, open to speculation, allowing others to drive the conversation? Look, it's a two-pronged problem here, right? You get downward pressure on growth and upward pressure on inflation. And while the Fed is supposed to be concerned with both, increases in rates are going to attempt to cool inflation, but it's also going to put pressure on an economy, resulting in what many are calling a potential recession. And again, I remind you of what Paul Volcker had to do to tame inflation that was running at better than 10% back in the early 1980s. He jacked rates up to 21% and brought the economy to a halt. Housing prices collapsed, which is the fear once again. As rates go up, money becomes more expensive. Mortgages get more expensive. Housing prices have to come down to adjust for the increase in carrying costs. And so now you have a declining stock market, a declining housing market, continued rising prices, and economic malaise, which is not a win-win by any stretch. Now, I'm not sounding the alarm bells. I'm just laying it out so that you go into this with your eyes wide open and you talk to your financial advisor and you set yourself up, right, in the proper mix of stocks that you want to own and should own. Now, overnight, Vlad hits Kiev residential neighborhoods with a barrage of missiles. China locks down thousands of people, forcing work closures. Chinese tech names continue to get drawn in quarter. Hong Kong down 5%, China down 4.5%. European markets all off this morning by 1.5 to 1.7%. And U.S. futures were lower, but suddenly just started to tick higher around 7 o'clock this morning. I think more from an oversold position. Dow futures up 15, S&P's up 5, Nasdaq's up 45, Russell's up 5. The 10-year Treasury is yielding 2.11%, the 30 years at 2.45. Oil under pressure because of the new China COVID story. Lockdowns conjuring up images of lockdowns sweeping across the world yet again. So oil is suffering as they go with that demand destruction story, which is baloney. The talk today is going to be all about U.S. macroeconomic data and what the Fed will do. It's also going to include more Russia, Ukraine, and what the next potential move is going to be out of Vlad and then Zelensky. The S&P closed at 41.73 after trading as low as 41.61. We remain in the 41.14, 44.60 trading range. Remember, in the long run, geopolitical events do not price stocks, but they do create chaos in the short term. Stockpile some cash. Put your shopping list together. Confirm that the reasons for what you own are still the reasons for why you should continue to own it. Good stocks on sale are just that. Good stocks on sale. Talk to your advisor. Okay, great. So listen, what are we having for dinner tonight? This is so good, and it's so easy to make. Now, it's a marinated pork loin with rosemary and lemon zest and little white wine and some white wine vinegar. It's good. It's delicious. And look, it's an Italian staple. Roasted pork is an Italian staple. It's plentiful, it's relatively easy to cook, and it's always very good. So I want you to try this easy recipe. Prepare the pork loin, and it's going to have your guests just drooling for more. The list of ingredients is short, but the pork is long on taste. So for this, you need like a 3-pound pork loin. You need salt and pepper, 5 or 6 cloves of garlic. Listen, I love garlic, so the more the merrier. You need olive oil, 3 teaspoons of chopped fresh rosemary. You need lemon zest, beef broth, 1 cup of white wine, and 2 tablespoons of white wine vinegar. That's it. Now, in a mortar and pestle, you know that tool you use to crush and grind and mix. You can find these at Amazon or Williams-Sonoma or any good kitchen store. You want to add 1 tablespoon of salt. Kosher salt for this is preferred. 3 or 4 cloves of peeled garlic, olive oil, rosemary, and about 1 tablespoon of the lemon zest. You want to mash it in the mortar and pestle, right? Turn it into a paste. Now you want to chop the other garlic cloves that you did not use, and with a knife, make a couple of holes in the pork loin, and then stuff the garlic directly into those holes deep into the loin. Now rub the loin with the paste that you just made in the mortar and pestle, making sure to massage it well all over the meat, right? Long strokes. Make sure you get it all over the meat. Refrigerate it now. Put it in the fridge for about an hour. Then remove it. Let it stand at room temperature for 15 or 20 minutes. Now, preheat your oven to 385 degrees. Place the pork loin in a roasting pan with a little bit of beef broth and place it in the oven. After 20 minutes, you want to turn the loin and continue cooking for another 20 minutes. Now, when you stick the meat thermometer in, it should read like 145 degrees in the thickest part. When it does, remove the loin and let it rest covered with tinfoil for 10 minutes. In the meantime, you want to add the wine and some wine vinegar to the roasting pan and place it on the stove and bring it to a boil. Then turn the heat down, simmer it to just reduce it, making sure to scrape the bottom of that roasting pan for any bits. It should only take 5 minutes or so. Slice the roast and present it on a warm serving platter on a bed of fresh kale and maybe some lemon slices to doll it up. Remember, it's all in the presentation. It needs to be pleasing to the eye as much as to the stomach. Serve it with the juice and applesauce if you want. The dish can be complemented with a side of roasted potatoes and peas and a large mixed salad with tomato wedges, red onion, cucumber, and hearts of palm dressed in a balsamic vinaigrette dressing. And for this, I'd say enjoy a light red wine, not a really heavy red wine. But, you know, a Pinot Noir is good. I would drink a Chianti with this as well. Kind of Chianti is like a table wine. It's very popular in a lot of Italian households. It's just another one of those staples that you always find on your grandmother's table. In any event, like I said, the day is getting started. It looks a little bit cloudy and fuzzy outside. It's not raining. It's not stormy, but it feels like it could get that way. In any event, take good care. I'll see you on Thursday. I'm not here tomorrow. I'll see you on Thursday. Take good care.